This is WPSL Port St. Lucie, the talk of the Treasure Coast.
Why would you want to go to a business meeting?
It's 11:07 at WPSL 1590, the talk of the Treasure Coast, and live from the Bermuda Triangle with Charles Moskowits in Boston and Dennis in Denver and back again. Hey, good morning, guys.
Hey, Greg.
Good morning, Greg.
How are you?
Just dandy. Hey, Greg, I got a question for you.
Yes, sir.
Bishop Sycamore.
Yes.
Totally bogus?
You know, I'm not sure if they're totally bogus, but yeah, they pulled one on ESPN. That's for sure.
I mean, what was the upside there? How much money is involved?
You know, I don't know at the high school level. The problem with a lot of things that ESPN airs is that it's not really a network show.
Right.
You buy it from a separate syndicator who then, sells it to the network. Somehow, whoever the syndicator was did a great sell job on this school that nobody's ever heard of from Columbus, Ohio. I have no idea.
Must have been an interesting game to watch. Only 58 zip?
Yeah. Well, let me tell you, IMG Academy across the state over in Fort Myers has got I don't care what sport it is, they've got a factory over there. And that's all they do is produce athletes. So yeah, I'm not surprised at all. Yeah, so how
we have Dennis on with us today because Dennis has acceded to trade a gold only account for us in futures. Now he trades everything, but with prices the way that they are, a lot of the margins have increased. I don't know if your listeners understand, but when you trade futures, you're actually buying and selling the actual commodity. And so what you're doing is margin is actually a down payment on the contract. So as values have increased in things like gold and silver and a lot of the actual soft commodities like the grains or cattle or any of those other things, as the value of the contract has increased, the margins have increased, the down payment has increased. And so what Dennis has very generously offered to do is to take traders who are interested in the futures, and I'll let him explain what all the advantages are, but take people who are interested in futures and trade the one that he has probably the best record of all of the things that he does, and he's up a monster amount today, year to date, in all of those futures. But because gold has a half contract, which is 50 ounces instead of 100, it makes it a lot more reasonable to trade. So without further ado, I will turn it over to Dennis, and he can explain what it is that he's doing, what his track record is with it, and what his credentials are, because they are extreme.
Thank you, Charlie. First of all, I want to make a prognostication to you there in Boston. I'm picking the Patriots to win the division. I know the Bills will probably be favored, right?
Yes.
But I think Belichick has a lot to prove. I'm rooting for him. I love the fans up in Boston. You got some great teams. So I'm going on record that the Patriots are going to win the division, all right?
Yep.
I'm sure you won't be unhappy with that, would you?
No, I'll be very happy that if you're correct. And I think you will.
Well, we'll see. Do you want to go over the markets first for a little while and then do the gold only? What would you prefer doing, Charlie?
Well, let's talk about the gold.
All right, let's look at the gold because I have some predictions I want to make. Number one, back in 1980, gold was $850 an ounce, and the Dow Jones average was $850 an ounce. They were 1-to-1. And right now, the Dow's about 19 times the price of gold. I am going to make a very profound prediction now, and I could be wrong. I think I'm right more than I'm wrong. And time tells. That's what's great about this business. And I hold myself accountable. I am predicting that we're about ready to start where the Dow is only going to be 5 times the price of gold. Right now it's 19. I don't know where the price will be, but it could be $3,000 gold and maybe $15,000 Dow. Now, just to preface that, and it's on record, you could see in the over-the-counter journal, or I was on NBC in San Francisco, Charlie, back in 1988, it's in writing, memorialized, I predicted that the Achilles heel was the Nikkei Dow in Japan. At the time, it was 39,000. And when I predicted it was going to probably drop about 70%, they all said, well, you're the only one who feels that way. And I felt good about that because when people agree with me, I'm not always right. Anyway, it did happen. It was the Achilles heel. Nikkei Dow dropped from 39,000 to 7,000. Here we are, Charlie, 21 years later, and we're still not back to the same thing. Now, I don't mean to be a negative guy. I'm trying to be realistic. Japan is the third leading economic power of the world. At the time, they were second. We were one, they were two. Now they're after China. Have you ever been in Japan?
Yes.
All right, because they don't grow bananas there or sugar, right?
Right.
It's an industrial power. Now, why can't the same thing happen here in America? Because one of the things that you and I agree on is that it's never different. If it could happen to Japan, it could possibly happen here. And could you imagine that where the market is right now, if 21 years from now, and you were 21 years older, and there was probably more inflation, you were still behind? I mean, well, who knows? It
but Dennis, what people don't understand is the effect that has on the standard of living. There is no bigger tax than inflation. And while people would say, oh, well, if prices are going down, that's great, we can afford to buy more. But in fact, that's not the case. It's a direct link to your standard of living.
Yeah, I agree. And our standard of living, Charlie, really, since the Bretton Woods thing, has really, we have more material things right now, as you know. We have 5 televisions, 3 cars, take lavish trips. But now we have it where the woman has to work. We have more crime. America's standard of living started to drop in many ways, and this is our country, ever since they took us off the gold standard. All right, now let's take a look at the gold market. Obviously, I go long and I go short, and I'm going to bring out some facts. I don't mean to brag, but Richard Russell, who's now deceased, and Jim Blanchard, sorry about that phone. They both said I was the finest gold trader they've ever seen. Now, I was honored to write a full-page article for Barron's, which will send your clients if they want to see about trading gold around the world. I was really honored with that.
Hey,
Now,
Dennis, I've got a question for you. Why did we get rid of the gold standard?
Why? Because if you don't have gold, the politicians control everything. If you have gold, they can't control anything. And I'm not admired with the politicians on both sides, okay? All right, but anyway.
Wait. The other thing, Greg, I think that what you're looking for is that when you have a gold standard, you have some pretty strict adherence to the amount of money that you can put into circulation based on that gold. So, it became smoke and mirrors instead of real gold.
Yeah, as I said, let's look at when Nixon took us off the gold standard, because maybe, Greg, we don't have the gold. The gold of Fort Knox is our gold. It's the taxpayers' gold, and they won't let us audit it. And then also Germany, about 4 years ago, asked to have their gold delivered, and we said we can't deliver to it now. So you figure the rest out. All right, now let's look at gold. I was lucky enough that the managed account reports, which audits advisors, came out and showed that my gold record has averaged 50.5% a year, which is good results. But they also went through, Charlie, what they call the Sharpe ratio, which shows how you could ruin someone. And with me, it was only 4 chances out of 1,000, which is the lowest they've ever seen of having someone lose all their money. All right, so getting back to gold, and the golden rule is the one who owns the gold makes the rules. Now, I've owned gold since 270 with the physical, but I trade the futures, and I also like to be short, because when the market in gold drops, it tends to go down even more. If a person took $15,000, that's 1.5, they could take as little, we have no problem, Charlie, you and I, of them taking a 30% risk. That means they would be risking $5,000 if they want to. Could it happen? Of course it could happen. I think it's unlikely in gold, because the gold market, like almost all futures today, trades for 23 hours a day. And the only time it closes is between, what's it, 5 and 6 back east, Charlie?
Yes.
Eastern time. All right. So, I mean, I don't think any news is going to come out for that 1 hour during the week, that is, that could possibly hurt you. The only time you're exposed more is like over a weekend, because you're locked out of the market from late Friday until Sunday at 6. And it happened actually this Monday, where yesterday gold was down about $35. And it does tend, and I like to be short, and I do that sometimes. Now, I need gold here to hold, let's see, the 17, let me put my glasses on, forgive me. I need gold here to hold, where's my notes? I've been up since 4 this morning. I needed to hold around the 17, I think it's a 1787 level, basis December on the close. And I think it's probably going to do that. Now, I'm surprised, maybe you could help me. I'm surprised why the dollar here temporarily has been this strong. I don't know why, but whatever it is though. All right, so getting back to gold. Leverage is great if you know how to use it. We use them when we buy a house. If you purchase a house for $500,000 and you put $100,000 down and you borrow $400,000, and you got to pay interest on that, on the 400, it's not interest free. If the house goes from 500 to 600, you've doubled your money. So in the gold contract, let's look at the 100 ounces. That's $180,000 worth of gold, because you own 100 ounces, and I could buy half the amount depending on what the client has. Now you work with stops. If gold here was to go to 1900 from where it is right now, if that happened, you would wind up making $11,000 on the contract. That's the good news. I think it's going much higher. On the other hand, what happens on the downside? You got to work with stops. You know, gold doesn't fluctuate any more than the price of NVIDIA or Microsoft. It's the leverage that could hurt you if you don't know how to use it. So when you do a trade, the first thing to do is to put the stop in. And I usually don't like to risk more than 2% of a client's account. So on $15,000, that would be $300. That's so I would probably wind up buying 50 ounces of the gold. Now, there's no interest paid on the leverage, and I know options are great, and you trade them so well. I don't trade options. I look at common stock. If you buy an option for December and you hold on to it and it expires at the same price you did the put or call, I believe you lose all your money, right?
Correct.
And I know you prevent that as best as you can, because I know you're a good trader. If you buy a futures contract for December 1 and it expires at that same price, all you're going to lose is a $12 commission.
Right.
And that's $12, Charlie, on $180,000 with no interest. All right, so we traded the 23 hours. It's a very, very fluid market. And the other thing that I don't think people are paying that much attention to, I hear them speaking about it on TV, is that undoubtedly taxes are going up here. I don't know how much they're going to go up. I know the president is in trouble. Maybe he won't get through what this administration wants. But in common stock or options, you have a 12-month holding period, right?
Right.
And then you have a capital gains tax if it's held for over 12 months. I guess if you sell before, you pay a normal tax.
Ordinary income.
Right, okay. In the futures market, which is a huge advantage, tell me how you feel, because all that counts is what you make after taxes before the government grabs as much as they can. In the futures market presently, on the first 60% of what you make, so let's say for argument's sake, you made $50,000 on your account. You only pay 60% of it. No, you pay 15% of the 60. So if you made $50,000, that would be 60% would be 30,000. You'd only pay 15, and on the other part, you pay the full amount. Now, I'm not aware of anything being lower than that other than municipal bonds, and I don't want to go near them now. Not where interest rates are almost at historic lows.
And
now,
Dennis, there's one other thing that I would just like to stress here for people, because when I've been really on this inflation bandwagon for about 18 months before it was fashionable. And a lot of the times, because my people weren't trading in futures, but were trading in options, I would look at some of the ETFs, the exchange traded funds, like the GLD, which is one of the biggest ETFs. It's the gold ETF. But what would happen is, as you're saying, there's 23 and a half hours a day of trading in the futures. That's not the case with options or stocks. in that if I were looking at, like you say, there's support at X. Well, a lot of the times we would reach that support in the middle of the night, our time. And by the time we had the stock market open and then the options market opens, those trades were not available to us. People have to understand when you're trading in a market like gold, we're not the big cheese here as far as gold. The whole rest of the world trades gold the way the sun sets. So when we close the market at 4 o'clock, then there's Asia. Then after Asia, there's Europe and London. These markets are huge. And as I know you've told me 100 times, people like JP Morgan and Goldman Sachs trade all of those markets. So they can do whatever they want overnight, while people who are trading in the gold ETF or options on that have a very limited chance to participate.
Well, that's correct. We had a recent example, Charlie, about 4 Sundays ago, when the gold market opened at 6 p.m. Eastern time, it dropped $90 for no reason at all. And I was able to take advantage of that. That's the beauty. Now, with the gold, the golden rule, I'm not a gold buck, by the way. I trade the futures up and down. I don't ever sell my physical. But the golden rule is the one who owns the gold makes the rules. Now, the gold now is going to Asia, going to China, going to South Korea, going to India. That's where the strength is moving right now. And please be aware of it, that Germany and France and Italy, and supposedly us, even though we won't audit the Fort Knox, they're the largest holders of gold in the world. And Charlie, did I ever tell you why gold doesn't pay any interest? I think I told you this once, right?
Yes, but
it doesn't have to.
Right.
And I mean, how in the world with a treasury note for 10 years paying 1.2, nobody buys gold because the treasury note's paying 1.2. And if it goes to 2%, who cares? Now, the gold market historically, not all the time, as you know, is counter-cyclical to the stock market. In other words, normally when the stock market is strong, gold doesn't act as well. When the stock market is weak, gold acts extremely well over a period of time. Can we go into some of this right now? Is that all right with you? All right, I looked at the RIDEX ratio yesterday. RIDEX is a fund that has a bull and a bear, to go into. And as a contrarian, which you could look at RIDEX, this is about the highest bullish percentage I have ever seen in the stock market. And I take that as a big negative. I really do. And I also think, as Baron Rothschild had said, he was the wealthiest man in the 1800s in France. They came to him and said, "Hey, Rothschild, how'd you make all this money?" He said, I wasn't smart. I just sold real early. Now, let's look at some of the statistics with the market, which I think could be very constructive for gold and for inflation. Number one, the people on television, most of them who just read teleprompters, who really don't know how to trade, they know how to buy breakouts. As you know, we have new people coming into the market the last 2 years, and they'll buy Apple and they'll buy Tesla. They don't read charts. The new people coming in do that. The PE ratio, according to some of the people on some of the major business stations, and I watch a lot of them, I like the international ones better. They seem to be slightly smarter, are telling you that the PE in the S&P next year is going to be 21. Now, I'll take exception to that because there's too many headwinds between all the monies we're printing, between the virus, between the derivatives. There's just so many things. But even if it did do 21, and I think it'll be more than that, because I don't think the earnings are going to be there, the normal PE in the stock market normally is 15. At 21, it's way overbought. And if we look at the markets like we had in 2000 and 2007, 8, the market dropped 60, 70%. Do I think the same thing will happen again? Yes. I'm surprised it hasn't happened yet, but I believe it will. Now, if that happened, could you imagine possibly the stock market coming down 60, 70% over the next 2, 3, 4 years?
That would be
bad. It would be bad. Hope it doesn't happen, but I think it's probably going to happen. Now, another statistic, because I like to study things historically, and it only happened in 1987, and 1987 and in 1929. In the month of August, the S&P, or maybe it was the Dow, I forget, made 12 new highs in that month of August, because August is historically not supposed to be a strong month. But it made 12 new highs, and then in 1987, a little bit later, the Dow dropped 27% in one day. That was huge, big time. And in 1929, that happened too. If we look at the market, the thing that scares me the most, Charlie, are the derivatives. Because the reason that we had the depression in 1929 financially was we had a 10% margin. People were able to buy stocks with only 10% down. Today, you have to put 50% down, but that's not the problem. You know, Charles Sagan looked up at the stars and he said, boy, there's 1 trillion stars up there. But how could we tell him that? Who could relate to 1 trillion? I can't relate to 1 trillion. I know how to write it out, but I can't relate to it. So he says, well, tell him there's 1 billion stars. The derivative market is right now has hundreds and hundreds and hundreds of $1 trillion worth of derivatives, because almost every country is now pulling a Ponzi scheme.
Hey,
And
Dennis,
yes.
pardon me for breaking in here, but I thought the derivative market went away when all those counties like Orange County, California, got scammed years ago. So it's still going on?
Oh, yeah. And in fact, look, let me be very candid with you. I have a financial background, and I could read a Microsoft statement or an IBM or even an Apple statement, and I could pretty much understand the financial conditions. I cannot read a financial statement from JP Morgan or Goldman Sachs, etc. It's all camouflage because they don't walk to the market. If they have a loan out for $100 million and it's only worth 70, they put down $100 million. So the thing, you see, Greg, the problem is I'm an old timer. It's never different. And human emotions never change. Why people lose money in the market is greed, as we had in 2000 with the dot-com era, and then in 2007 with the subprime. The other one is fear, and fear is much worse than greed. And I'm not happy this is going to happen, but I think it will. When the world figures out that the governments have lost control, because it's a whole Ponzi scheme right now, you won't believe the fear you're going to see. And the thing is, you know, Greg, do you know that the hardest thing for us to accept, including you and I and Charlie, is change? You know, when real estate's booming as it did when people were flipping, never going to go down. And now, and of course it did go down. And now real estate has done well because there's a low inventory. They're going to tell you it's never going to go down. Of course it's going to go down. It will go down. So change is hard. But my wife and myself, we're in 19 different investments because I'm not smart. I really am not smart. But I know that if I diversify in 19 different places and I get hurt in 3 or 4, I'm going to make it. But as Charlie does well in his newsletter, when he talks the non-correlation of commodities, if you're in the stock market and you're in bonds, just 2 things, and you get hurt in one, you are going to be hurt badly. And it's no fun losing monies. And I'm going to make another profound prognostication. I think it would be, even though the dollar has been fairly strong here for the last week or so, I think we're going to lose the reserve currency of the dollar over the next number of years to come. It has to happen. It's happened all the time. First it was Portugal. Then we went to Spain. They had the reserve currency. Then we went to Holland with the tulip bulb mania, where college professors were paying $5,000 for a flower. Would you believe that? Nuts. And they had the Dutch Guild of the Reserve, and they lost it. Then I went to my father's country. My father was British, came over here when he was 12, was a captain during World War II. The England ruled the waves. The sun never set there. Now they lost the reserve currency. Now after the war, we became the reserve currency. And unfortunately, Greg, and this is our country, this is the lowest esteem America has ever had because of what's going on. And you know something? Our enemies are emboldened and our allies hate us. And we can't hold the reserve currency. Maybe we could hold it for another 2 or 3 years. But if we do lose it, oh, the politicians, they're not going to know what to do. They won't be able to print. Inflation will go wild. And it's going to happen because it always does. Why will it be any different this time? Now, Charlie, your clients should call you or email you, and we'll send out the kit, you know, on the things with gold and all the reasons why, and a little bit about myself. And, you know, don't be lazy. Really. I mean, you know, knowledge is power. To be forewarned is to be forearmed. But I believe that everybody today, you, me, Greg, Charlie, should have a little money in gold, a little money in silver, even have a little money in the cryptos. Not a lot, but a little. You got to diversify here. That's why I'm in 19 different things. And I'll tell you, there's nothing like gold. That's why it's the gold medal. Why is there a pot of gold at the end of the rainbow? There's not a pot of apple at the end of the rainbow. So this is something that they should all find out about. What do you think, Charlie?
I definitely agree. I'm holding it up, but you can't really see it. There are silver bricks of roughly 10 ounces a piece that I buy on a very regular basis in order to have a little bit of a precious metal here at home in case I'm actually
you could see those bricks on the YouTube there just a second ago. Yeah. That so you
and Greg, the thing that you have to remember is that derivatives are any alternative investment other than stocks or bonds. Options are derivatives. There is no more prolific growth in anything more than in options. So if I say I'm buying a call or selling a call or a put, that is actually a derivative. They don't have to be CDOs that only banks trade. You know, if you think about it, in the example that Dennis used in real estate, if you own a piece of real estate and I'm interested in it, I could possibly option that for you. So even though it's a real estate transaction, it's a derivative within that market. And that's why there's so much out there. The biggest derivative is probably reinsurance. Insurance companies buy reinsurance. That actually is a derivative of the insurance policy. And so based on that, you see what that proliferation really looks like when we speak about derivatives and the market for them. It's an extremely large market, and frankly, most people don't understand them. They don't understand the effect of them. And so that really is the problem, because they don't get accounted for if you can't figure out what the actual exposure is. They'll tell you all day long what the upside is.
Yeah, and the truth of the matter, guys, is that there's only about 1% of the 100 backing in derivatives. Where in the stock market, we had a 10% backing in 1929, and we know what happened. But this is how nature is. It will always squeeze out the excessiveness. And I don't understand, when you have a bull market that has been fabricated by buybacks and other things, why people don't become more conservative here. Hey, Charlie, I mean, you trade the options so well on both the long and short side. But if a person right now took their whole holdings and they went to cash, and cash is not bad. Mark Twain said, I'm more concerned with the return of my principal and return on. It would be smart, because I think the market is in a topping area. If you look at the S&P, it's been 5 or 6 stocks that have camouflaged the whole S&P, where about 30% of the stocks now are below their 50-day moving average. Charlie, is that correct?
Yes, it is.
All right.
Hey, I can see that Pierre has joined us, and he has some big news. Now, Pierre is the CEO of Deep South. D as in dog, S, M as in Mary, T as in Tom, F as in Frank is the symbol here in the US. Of course, it is traded on several European and German markets. It's traded in Canada separately. And since we introduced Pierre just a couple of short weeks ago, the stock is up from just around 3.5 cents to trading just under 6 cents. And in fact, yesterday it did trade at 6. The volume has increased. It's a little quiet today, but I think that Pierre has some good news for us. So I'm going to let him take over. How are you this morning, Pierre?
I'm very well. Thanks to invite me on your show. Again, I'm pleased to be there. Yes, I have some interesting news, and that's the reason why the market looks better. Just as a reminder, we have a very large copper porphyry deposit in the south of Namibia. Namibia is in the southern African region, and we were developing that project up to recently, drilling it and developing it to eventually have a mine. The NPV in the project at $4 per pound of copper is $1.6 billion. The capex was $340 million with a IRR after tax of 42%. So it's a project that was moving forward nicely. And the Ministry of Mines in June has decided to not renew our exploration license. So while we were just starting a feasibility study on the project, we have claimed that the decision was not right, and we're getting back. We fight and we do everything we need to get the license back. And just based on the NPV, our value in the market is tremendous. But today it has been completely, part of that has been, we're pretty low on that. So the first thing we had to do is to ask the court in Namibia to review the decision of the minister and to interdict on the ministry to issue the license to anyone else. So the court has recently rendered a decision on the first part of that application, which is an interdict on the ministry to issue the license to anyone else. So what it means that the license is now blocked, and the ministry cannot issue or grant the license to anyone else. For us, it's very, very good news because it shows a couple of things, important point. First, the license is there and nobody can do anything on it. So the decision of the ministry to remove us from the license is not a good decision because nothing is happening on site now and there's no employment being created there, okay?
Right.
The second thing is that it shows that the court has considered that our case has some merits, because otherwise, if the court has not seen any merits in our case, they would just have said, forget about the interdict. You know, it's your case has no merit. So it's not the case. It shows that the court considered it as merits, and it shows also that the court has considered that if the license is given to someone else, there would be a huge damage on Deep South side. So that's very good news. Now, the next step with that is that and it's very helpful for our lobbying because we do a lot of lobbying in Namibia at higher instances, and it shows when you have the backup of the court. In Namibia, it's very important because they are very proud of their justice system, which is very independent from the political side. So for them, a decision of the court is something that has a huge impact. So it's very helpful for the lobbying we're doing. And next week, we have a preparatory conference with the judge where the lawyers will discuss the way forward. And there will probably be also some schedules that will be out of that to exactly when the hearing will take place for the review of the decision of the minister. So we will know more next week about the following, but it's a very good decision, and it shows that we have always been very confident that this decision from the ministry was a mistake. There was something wrong there, and we think that with our Namibian partners, our Namibian stakeholders, also directors and shareholders, we always thought that we're very confident to get the rights back, and that's a first step in the right direction. So before that decision, our market cap was over 30 million. Now it's probably about 6 million. So if we get the rights back, there's a huge potential, very good upside potential. So that's the good news.
As of year end, there was also a bunch of cash sitting on the balance sheet. And I know that the year just ended last week, last day of August. And I think it's also important for people to understand that even with this issue in Namibia, that you're not sitting still, you're looking at other opportunities in other places. And we certainly have the wherewithal to take advantage of those kinds of advantages, whether it's copper or lithium or silver and gold, whatever it is that, we find, we can walk and chew gum at the same time.
Yep.
We have the wherewithal and the knowledge and the expertise to be able to look at other things other than this one situation.
Yes. The way you should see it, we will have another project soon. We're pretty advanced in discussion on a certain number of good projects. And the way you can look at it is that you have we will have a new project. And on top of that, you will have an option call on a very important large project in Namibia also. And if we win our case, then the option call will transfer into a very good added value. So yes, we will have a new project, hopefully in the next month and a half.
Yeah, and I'm assuming that option is like a warrant or something on the stock.
No, what I'm saying about an option call, it means that the project in Namibia is becoming now, because it was our old project. We were holding the project. Now with that fight with the ministry, we don't hold it, but we have an option to get it back.
Right.
With the court case and the lobbying we're doing. Okay.
Yes, and as I said, we certainly have the ability to operate it.
Oh, yes, absolutely. There's no problem there. And
And
the
as-
project we're looking are in areas where we can operate also.
Yeah, and the whole point of the Namibia project that we went into in your first interview was the fact that it would be a very profitable project for us.
Yes, yes, absolutely.
And that's why the stock is no longer, under 4 cents and is, people don't really look at it, oh, it's 5, 6, 7 cents, whatever it is, but those are huge returns. I mean, I am a shareholder in the company and I own stock at 3.5 and 3.6 and 3.8 and up at 6. That's a very substantial percentage gain.
Yeah.
And, I can see more of that happening. As I said, the volume is a little light today so far. It's only, a couple of hours into the day. But the fact is that the volume has grown steadily every day. And so I'm very pleased. And the people that I introduced the company to, who will, of course, get this the recording of this, and we'll post it, and Greg will post it, and I'll post it in my Discord room with 3,000 active participants, and Pierre will post it on the website for the company. All of this information will be out there, and frankly, this is one of those things where, as Dennis was saying, the golden rule, he who has the gold makes the rules. In this case, knowledge is power. And the more information you have on some of these little under the radar companies, the more you can profit by that too.
Hey, Pierre, I've got a question. Are the other projects in Namibia as well?
No. No, we were already looking for new projects before that situation happened with Namibia, because it's always preferable to have more than one project to be on the safe side and bring more added value. So one is in Africa, yes, and 2 are in South America. But in countries we can operate quickly because we have good partnership locally for that. So. And to be frank, it's because we're firstly looking for copper project where we like copper, and we don't discard gold or silver or lithium, but we like copper. So it's but some of them are more gold than copper, but we'll see.
Yeah,
I got a question. Having worked in Tucson years ago, when the copper mines were going absolutely crazy in Arizona, do we have any more copper in the U.S. anymore?
I think so. Yeah, all that part, Arizona, Nevada, still has copper to be discovered. There's still some project that could become mines I would say in the near future, probably in the next 5 years. So there's still good potential in that part of the United States.
Greg, the issue isn't whether or not there's copper there. There's plenty of copper. The issue is, like it was with gold, nobody talked about fracking and oil shale when oil was $8 or $10 or $20 a barrel. Up here at $60 or $70 or $80 a barrel, you use different technology because you can afford to. When you have a commodity that traditionally has been around 2 or 2.25, selling for twice that, you'd be surprised how much of it can be found. It's the same situation with silver. People in India buy a lot of silver and gold, and it looks like it's huge demand to limited supply. But you get silver at $50 and you see how many candlesticks get melted.
Interesting. Okay.
It's not just the guy who had the car wash that took quarters when there was actually silver in them that turned it around. There's plenty of that stuff laying around. It's just a matter of price in order to, be able to grab it.
Yeah. That's exactly the situation with the United States projects.
Yeah. I mean, projects that don't work at $2.50 work a whole lot better at $4.50.
Yeah, absolutely.
And again, as I said in the original call, this is a dual play. This is not just the play on electric vehicles and the amount of copper that's used there. This is also an infrastructure play, because not only is the copper used in infrastructure, but the byproduct that Pierre gets out of Namibia is actually molybdenum, and molybdenum is used in metal alloys. So you have the infrastructure side and you have the electric vehicle side. And I don't know what they're going to run in all of those places that got destroyed in the hurricanes, but I'm going to guess there's a fair amount of copper wire being used there too in the grid. So, you have a whole lot of reasons for copper to stay expensive.
Mm-hmm. Absolutely.
All right. Well, thank you, Pierre. I really appreciate all the time and effort that you're putting in, and the fact that you come and talk with us. You're always welcome. And certainly as this progresses, I'd love to have you on a regular basis to give us updates as it's going on, because the most important thing from my perspective is keeping people really informed as to why we're seeing the action that we're seeing in the stock and in the volume in the stock. So I look forward to hearing from you again in the very short term. And that's about it for me, Greg.
Well, I'll tell you, I think Pierre, hats off to you guys to keep fighting for that. That was a huge hurdle that you guys cleared last week.
Oh yeah, that's a very, very important step forward. So we're happy of that. So that's why also I'm happy to report it. It's very important, and I will be pleased to come back on the show anytime to report good news.
That sounds good. Well, Charles, thank you so much.
And I'll include the link in my daily note and again in this week's letter. So everybody will have it. I'll post it on the Discord room and we'll keep you informed.
All right. Sounds good. Charles Moskowits in Boston, the great Wize Oz. Dennis in Denver. Pierre in Montreal. Wow, what an international show.
Yep.
This is very cool. Money Info with Charles Moskowits, great Wize Oz in Boston Patriot country. I wouldn't even say New England Patriots. Shows how old I am. This is WPSL, Port St. Lucie, Talk of the Treasure Coast, webcaster to the world on Google Home, Alexa, and TuneIn worldwide.